How real are the concerns about a global food crisis next year? Obviously, the Russia-Ukraine conflict has had a huge amount of impacts across the entire commodity supply chain. Energy is at the bottom of the supply chain for pretty much everything in the world, and then has knock-on effects throughout everything in general, but specifically through commodity cycles. Energy and oil and nat gas and fertilizers are all intimately tied together, and that fertilizer piece has a huge impact, obviously, on the agricultural supply chain. So, how bad could this get? Has the media blown things wildly out of proportion? Had they got it right? Is the truth somewhere in between massive crisis and nothing happening? That's the genesis of the conversation that we have for you today. I've asked Matt Warder to come on and talk about this with Pedro Dejneka, who's a partner at MD Commodities. Pedro is a specialist in this specific area. He's one of the best minds in the macroeconomic analysis of the ag markets in particular. And so we've invited him on to kind of answer this question for us. So I think it's going to be one of those very enlightening conversations, and I'm really looking forward to it. I think you're going to enjoy it.
Hey, thanks, John. I'm Matt Warder, founder and CEO of Seawolf Research. And as mentioned, we've been talking a little bit about the war in Ukraine, the molecule shortage, and how that affects both energy and sovereign debt markets and precious metals. But whenever we affect energy, it always affects natural gas. And when you follow natural gas on down the supply chain, you run directly into fertilizers and agricultural commodities and those sorts of things. And I don't have a whole lot of direct experience with that. So I'm really fortunate to have with us my friend Pedro Dejneka from MD Commodities. Pedro, how you doing?
Hey, Matt, what's going on? It's well, first of all, thank you for the invite. Pleasure to be here with you, and especially knowing we'd have the West Virginia connection going on. So it's always a pleasure. Love West Virginia, and I love the people from West Virginia. So thanks for having me.
Well, my pleasure on there. And yeah, it's so weird. You're the second. You're my second friend from Brazil with West Virginia connections, and there's so much.
Right? How about that?
I know, and the cool thing, every time I've been down there, I've been so sort of struck about how kind of like similarly engaging, like the people from the area are, very personable and always eager to have some fun and share a good conversation. So it's wild that it's a small world, I guess, as well.
It is very, very small world. Out of all places, West Virginia, right? And I think those of us that know, like you said, Brazil and United States, there's a lot of Brazilians here in the U.S., but West Virginia is just a special place, man. It's just a special place.
Thanks.
So anyway, so thank you, and looking forward to it.
Yeah, so I guess before we get started, you mind telling us a little bit about your background and what MD Commodities does and all that sort of stuff?
Sure. Yeah. So I threw the West Virginia thing in there. So I was actually an exchange student back in 1995. I had you guys see the basketballs in the background and pictures of me and my kids. I still coach them, and basketball is a big part of our family. I grew up in Brazil, and told my dad when I was about 13 years old. I said, Dad, I want to go to the U.S. and try to play college basketball. And nobody knew anything about that at the time. Internet was barely there, so my dad's my hero, man. He took a chance on me, borrowed money he didn't have to give me 1 year here in the U.S. And this sweet family from Winfield, West Virginia took me in. And, after a stint in Indiana with also an awesome, absolutely awesome family there. And, but yeah, this sweet family took me in West Virginia, and ended up playing well enough that I got a basketball scholarship and stayed in the U.S. and, did a business administration degree, specialized in finance and economics, started in the financial markets, went to Brazil. Actually, before I started in the financial markets, I went to Brazil to play professional basketball for a little bit, but then got a job offer here from Morgan Stanley in the U.S. and kind of started down that route. And it didn't take me long to realize that even though I love the financial markets, macroeconomics, geopolitics, and all of that, the commodity space is something that always attracted me, especially because of the ties that Brazil and the U.S. have to it, right? Especially Brazil being the largest exporter of multiple commodities in the world, producer, exporter. So I always wanted to get into international business, and I always wanted to find a way to kind of have a bridge, right, between my two homes, Brazil and the U.S. And I was very fortunate and blessed in 2008 after some time spent Morgan Stanley, Merrill Lynch, J.P. Morgan. I was hired to go to Chicago and had a commodity trading desk taking care of the Brazilian clientele for R.J. O'Brien, and wonderful, wonderful people, R.J. O'Brien. And so that was the beginning. I fell in love with it. If you would have told me when I was in college playing basketball here in the U.S. that, hey, you're going to be working with farmers, multinational companies talking about cotton, soybeans, corn one day, I would have said, you guys, you're out of your mind. There's no way, right? Even though I grew up around that in Brazil, right? I left when I was 16 years old, and I grew up around cornfields, soybean fields, and all of that. But never, Matt, never in my wildest dreams I thought that would happen. And so here we are. And a few years later, right, so 2016, we started MD Commodities. We have an office in Brazil, in Paraná state in southern Brazil. Have a fantastic business partner down there, Ismael Menezes, and we advise over what am I looking at? I'm looking at close to 10 million acres of land in Brazil. So that's quite a bit, between cotton, corn, and soybeans. And we focus a lot on that, Matt. We're a boutique consulting company, focus on these three commodities: cotton, soybeans, and corn. But we also have to look a lot into FX, exchange currency situation between the Brazilian real and the dollar. We have to advise our clients when we think the best timing to lock that in is. And also have a situation here where we have to look at macroeconomics, geopolitics. So love what I do, love the clients we work with. And hopefully I can help you.
Oh yeah, that's great. I mean, same boat for me too. By the way, I played baseball in college, and I was a musician for 10 years. And then my guitar student actually gave me a job as a coal market analysis after my music career had ended. And one thing leads to another, and here we are talking about this stuff. It's amazing how that works.
Isn't it crazy?
Yeah. Well, it's sort of like we were talking earlier. The reason that I like it is because it's commodities. Everybody, it touches everyone, right?
That's right.
And when you get into the business, I mean, we've all heard the phrase "all business is people business." Well, commodities business is really people business,
big time.
And the great part about it for me is that I've learned all these different verticals over the years, and I've always learned them from these people who are willing to share knowledge, who are willing to sort of learn cross commodity, and it's just this really excellent kind of community with which to learn together about everybody.
You're saying something special there, Matt, because something that I think as former athletes, anyone that's a former athlete that gets into business or whatever career choice they make, one thing we miss is the constant, in sports, no matter how good of a game you have, there's always something else to learn, right? And the moment that you feel that you know it all, you're toast, right? You're literally toast. As a matter of fact, I mean, I can even move my camera a little bit here to the side, and there's a poster with Senna there, that says basically Ayrton Senna, the great F1 driver from Brazil. It's a big idol of mine and things like that. But, it's basically the moment that you feel that you know it all, you're toast. Somebody is going to come and pass you, right? And so the commodity space allows us not only to bring that competitive nature that we have, because it is a very competitive market, right? And as you know very well, but like you said, you have to be constantly learning. It's whether it's cross commodity, whether it's the commodities that you follow, every single day. There's always something new happening, right? And especially in today's world, geopolitics playing a major role in. We never know. We're going to wake up to some crazy headline. And then the beautiful thing about the commodity space, knowing who to go to when you need to know some information, right? It's not just relying on the mainstream media. It's knowing, hey, let me call Matt for this info. He might have some insight that might help me out. It might help me understand my own space a little better. So I love that about the commodity space, man.
Yeah, I mean, getting back to sports, it's like we know we can't know everything. We know we can't cover the whole ground. So it's good to have a team. And when you meet the right people to put in your network, that's really what you've done. Is you've recreated a team of really excellent role players who understand sort of how they work. and it's really for those of us who came up like through the research industry, we all get siloed, right?
Right.
And people networking, those
Yeah.
sorts of things. That's the only way that we can kind of break it down, over the years. So anyway, that's all good points. I guess let's dive into the topic a little bit. So
Sure.
we've been talking about the shortage of gas, and I know in Europe right now, we're up at tank tops, but it's also the beginning of November. So we know that the weather's going to turn here eventually. We're eventually going to draw down some of that storage. Question is how quickly. Is there going to be enough available? But we had a really tough time this summer with fertilizer availability,
Right.
and then of course the pressure from the Russia-Ukraine invasion, sort of threw a monkey wrench in the logistics network of global commodity supply, but especially around food, in which I have no direct expertise. I won't say it's been a black box, but opinions vary as to the severity of how bad things got, and I thought it would be good to just kind of go from the top down and say, okay, well, how does all of this feed directly into fertilizers and agriculture, and I'll let you kind of take it from there, and we'll let the conversation evolve. But that's kind of the backdrop.
Sure, sure. And I appreciate you having me. And I think you're spot on. When you say opinions vary, and that's to say the least, right? I was recently, we almost crossed paths in Europe, right? You were in London, and I went to Eastern Europe a couple weeks ago to speak, headline an event there on Black Sea grain, right? And talk to some of the Black Sea folks and understanding, right? That's a region of the world where the majority of the conflict's coming from, unfortunately, right? And by the way, it's very difficult at times. We're asked to make do an analysis, cold, objective analysis of a subject that includes the human aspect. It's such a tragedy on the human aspect, but we have to somehow put that aside, try to analyze how that can impact the rest of the world, right? And that's the situation in the Black Sea right now. And one of the things, one of the slides that I had in the presentation had multiple magazine covers from some of the biggest publications in the world, not to name any names here, but throughout the years. And there's a common theme here, Matt. For some reason, I don't know what the reason necessarily is, but the viewers can probably guess, right? I think a lot of people are going to have different opinions on this, but at the end of the day, we can agree that the media tries to find a way to bring panic into people, right? So the various magazine covers that I got and headlines went all the way from the 60s and 70s all the way to nowadays. And it's this constant thing about food crisis. It's this constant thing about we're going to run out of food. Oh my gosh, we're not going to be. And it gets tiresome for someone like myself that has specialized in that area of the commodity space, right? So I think to start the conversation here, Matt, let's just from the very beginning state, no, we do not have a food crisis. No, the world is not going to run out of food, right? That said, we have challenges ahead of us. And when a region as important as the Black Sea has, the type of conflict that is happening right now, where we do not understand the type of flow that we're going to get. What kind of consistent flow of commodities are we going to get? Oil seeds, energy space, right? Crude oil, natural gas, corn, wheat. What kind of flow can we expect? And neither you nor I can have a straight answer to that right now. Right. And that is an aspect that, sure, it brings uncertainty. So it brings volatility, lack of transparency. But one thing is to talk about lack of transparency, volatility, uncertainty. The other thing is to talk about an all-out crisis. The point that I made during our presentation there is, let's look at South America. Let's look at Brazil. I'm just going to use corn as an example. Last year when the war broke out, or excuse me, the beginning of this year when the war broke out, the world all of a sudden, all these headlines, we're going to run out of corn, we're going to run out of wheat. Well, on corn specifically, very few people talked about, wait a second, the Ukraine might not export, say, 15 million metric tons of corn that they still had left to export this year. But guess what? Brazil is going to export this year 20 million metric tons more than they did the year before. And it's more than going to make up for that deficit that the Ukraine is going to leave. So nobody wanted to talk about that. Everybody wanted to focus on the war, the crisis. Oh my gosh, we're going to, the fertilizer space, we're not going to have fertilizer left. And the Brazilian producers, who, by the way, Brazil is the biggest producer of soybeans in the world, second largest exporter of corn, coffee, sugar, et cetera, et cetera. They're not going to have fertilizer. They're not going to have a crop. And it ended up that it was no issues. As a matter of fact, Brazilian farmers are just about finishing right now planting the largest area ever for summer soybean crop, and without any shortage of fertilizer whatsoever. Now, they paid a very, very high price for those fertilizers. And I think that's where the discussion needs to be had. It's in my opinion, it's not so much the lack of fertilizers, is the world prepared for the high prices that can come with it? Are farmers around the world prepared to take advantage of high commodity prices that, even with high fertilizer, high input costs that we have at this point, are still offering margins, healthy margins for them? So is the world producer taking advantage of these healthy margins or not? And so what can that mean for production going forward? I think that's the way I look at it, more me, my partner, and for our clients, my business partner, and for our clients. So on the fertilizer space, give me an example as well. When the war broke out, the Brazilian Ag Ministry immediately made a decision to, say, listen, we're going to go to Russia and we are going to basically make a bilateral agreement that, hey, we need to make sure that we get enough fertilizer because we cannot stop planting. And they did a great job of doing that. They went there and secured the fertilizer that they needed to make sure that Brazil kept planting without any major issues, right? So on that space, I think we're seeing reflections on price. By the way, fertilizer prices have already come down quite a bit, right, where they were before. So what does that mean for 2023 planting seasons in the Northern Hemisphere and the Southern Hemisphere? So that's a discussion that we're having at this time. But we're not concerned about running out of fertilizer or running out of food in no way, shape, or form at this point.
Right. Yeah. And, fertilizer prices have come down largely because gas prices have come down. As I was sort of mentioning before, it's really the exact same thing happened in the gas market, right? Europe decided we're going to fill up all our storage up to the tank tops, and we're going to pay a really high price for it.
Right.
That's what they chose to do. And now we're at this point where, okay, well, we've gotten there. Weather is so far cooperating. We don't really need to buy anymore. And the bid has largely disappeared from the gas side.
Right.
In about a month's lag, that started to happen in the coal markets too, right? There's no bid really under coal right now. Now there's no offer either. It's a separate story. But it's the exact sort of same dynamic. So gas is really kind of leading the charge here. And I have to be viscerally aware of, the changes in that. But gas, when I think about it, it's sort of similar. It's not that we don't produce enough gas globally. It's that logistically, things have gotten all twisted up now. Russia used to supply, the bulk of Europe's gas through Nord Stream 1. Nord Stream 2 is coming online. Now those aren't options. So we only have the southern pipelines, to supply the region. Similarly, Russia was supplying 50% to 70% of Europe's coal, high calorific value coal. There's no replacement for that in the world. Now, supply chains adjusted over the course of about 3 months. Russian coal started going to India, it started going to China, started to go to places in higher quantities where it hadn't normally. But the problem that we've had on the energy side is there isn't enough capacity to catch up to that delta, specifically on the high CV coal side. It's just we can buy all we want, we can bid up the price, and then we can sit back and hope it's enough. And that's basically as best as we can do. Is that kind of the analog in the ags and fert space as well?
It is. It is. I think everything you're saying and you're describing it. It's interesting, right? You mentioned the expression cross commodity, right, a little bit ago, and I'm a firm believer, right? Once you get into the commodity space, no matter, for instance, you say, listen, Pedro, agricultural space is not my forte. But you and I can sit here and have an educated conversation the same way that energy is, it's not my everyday thing. It's not my forte. You know enough that you need to know about the agricultural space to know how it correlates to your business and vice versa in my case, right? But I think I am a firm believer that once you're into the commodity space, for you to migrate from one commodity to another, from one space, say from industrials to energies, from agricultural to industrials, etc., it does not take long for you to find your footing, in that new space, simply because commodity analysis works very similarly across multiple spaces, right? And at the end of the day, the flows, right, the supply chain issues, the demand situation, it all ends up correlating to politics, geopolitics, macroeconomics, and things that you have to be aware to do the analysis that you do for your clients. I have to be aware, even though specifics of those analyses, you might use some and I might use other aspects of it, but we're aware of the general space. So yes, to your point, it's something very similar that's happening in the food space. What we have right now is more of a distribution issue than anything else. It's where are the stocks around the world? There's this whole thought, for instance, when you bring China into the conversation, China is the world's largest agricultural importer, right? And so in 2020, second half of 2020, China started buying up a lot of agricultural commodities, from the US, from Brazil, etc. There's this line of thought that, hey, they're stocking up. Prices were so low, they're taking advantage, they're stocking up. Are they? They continue that pace, strong pace of imports in 2021, and things have really slowed down here in 2022. Now, China is as a country, right? They're excellent commodity traders. They know what they're doing, and yeah, I mean, they understand. Agricultural commodity prices are pretty high right now. We bought and stocked up at very low prices. So maybe we'll use some of our stocks until we understand that the situation around the world is more balanced out. And when prices get low enough to where we believe it makes sense for us to buy higher volumes, we'll be back and buying higher volumes, right? So they're sort of hand to mouth at this point, I guess I would say, buying what they need to buy. But absolutely agree with you that the energy space, the agricultural commodity space, they function in very similar ways. And I think right now the focus needs to be, again, where are the stocks around the world? Where are they located? Logistically, can they get to where they need to get at the time that they need to get there? So you might have some dislocations, right? For instance, the Western Corn Belt in the United States right now, bases are sky high. You have logistical issues due to the drought in the Mississippi. You have a drought in Nebraska, for instance, in that whole region of the country that is one of the main corn producing regions in the country. And so in that particular region, you could say, listen, corn buyers are having to pay up to get corn out of farmers' hands. But that doesn't mean that the world's running out of corn. So you have certain specific situations in different regions of the world. And that's really the main issue right now, but absolutely not a general feeling of shortage.
Right. So if the problem is you can't always get the right product to the right market at the right time, then really we're sort of talking about mostly developed markets versus emerging markets.
That's right.
I mean this is true for energy as well, right? Germany has this like huge gas stockpile that they'll be able to draw on, and they're the most important industrial company in Europe. But what does the storage situation look like in smaller countries? And if we do have a really cold winter, can we get product to market at the right time? You mentioned that Brazil makes up for the corn deficit with Ukraine, but are there scenarios in which maybe we don't get enough food to some of these smaller countries, many of whom have, currency issues as well. Is that a possibility?
That is a possibility, and that to me is where the worry is. I agree 100% with what you just said.
Mm-hmm.
It's not a worldwide food shortage problem. It's a food shortage problem in the places that, quite frankly, are the last places on earth that you would want to see it more of a food shortage problem, right? So, unfortunately, that's the world that we live in. I dislike when I hear the focus on the media and some analysts, so much on, oh, there's a worldwide food shortage. No. The focus is not so much on that. We produce more than enough around the world. Trust me, we produce more than enough food around the world. But that food does not get to where it needs to get year after year after year. And that's a problem. So yes, that is absolutely a possibility that that problem could increase. We hope, in future years here, we put a little more focus in that and trying to, I don't know if the word equalize, maybe balance a little more the distribution, right? So the places that need it the most can get it at the price that they can afford. That's the other aspect of it, right? Because some of these developing countries and developing economies, they're not going to be able to afford, corn or oil seeds, et cetera, if prices get out of hand, right? So that's when the issue gets a little heavier, but it's something that we have to face head on.
Yeah, and so there are two aspects I think of that we talked about before that were pretty interesting. One was the balance of domestic markets with the markets on water, right? Media tends to be focused on the markets on water. Well, we're X amount of bushels of wheat short relative to where we should be or whatever. But as you pointed out, like if there are places that do have stocks, it's not that there's a shortage per se. It's that, again, distribution. So can you talk a little bit about the balance between domestic and on water, how Russia's affected that? Anything in developed markets that sticks out in your mind in that regard?
Yeah, and again, it's basically a supply versus available supply story, right? It's the supply's there. All right, but where's the available supply? So when the war broke out, for instance, right now everybody's, ourselves included, everyone in the grain market is paying attention to the grain quarter, right? We talk a lot about the grain quarter in the Black Sea, and is it going to continue? What is going to happen with that? And that's the point that I was mentioning earlier on, where we don't have a lot of visibility. Now, I don't care who you talk to, nobody can give you a straight answer on that right now. And giving an example, that deal expires, it has to be renewed by November 19th. So it expires now, November 18th, in 8 days, it expires. If no one backs out of it officially, right? If say Russia or Ukraine, or if they don't come out specifically and say we're out, from my understanding, the deal automatically renews. It automatically renews. So this is really a case of no news would be good news for the grain commodity space in the next 10 days here. If we hear nothing out of Russia that they are backing out, that's good news. If we hear nothing out of Ukraine that, okay, we're not going to be part of it under these circumstances, that's actually good news because it will automatically renew. The question becomes, the problem becomes is, what if it doesn't? What if we go into a larger renegotiation time frame? Now, world buyers have to readjust. Developed world, developing world, they have to all adjust and say, okay, Europe right now, for instance, is getting Ukrainian oil seeds, corn, wheat via rail. They're getting that via rail or via truck, going out on the western portion here of Ukraine, right? So there is some flow of commodity, but it's not the size of flow that you need to sustain, right? Sustain the demand that's there right now. So when you talk about agricultural commodities, and right now, November 2022, you talk about transportation issues, you talk about logistics, you talk about supply versus available supply. Absolutely, the Black Sea story is the main story right now. Obviously, we also have the logistical issues here in the U.S. With grains not being able to get to the export corridor, to the Gulf, for instance, via the Mississippi, due to the drought. It's a historical drought, historically low levels, right, of the Mississippi. So again, if you're a buyer of commodity in this space, Sure, you can look out 2, 3, let's say 3, 6, 12 months from now and say, no, we don't have a shortage of commodities in the world. Brazil is 2 months away from potentially harvesting the largest soybean crop ever, over 150 million metric tons. That's over, close to 5.5 billion bushels of soybeans. So no, there's no shortage per se, but I got to cover my needs, and I got to look at the logistical side, and I got to look at when am I going to have what's available, what's out there available to my customers and to do what I need to do, whether you're a crusher, whether you're an ethanol plant, and whatever it is. So I think that discussion right now is dominating airwaves in the commodity space, and I think rightfully so. It's not so much the availability of it, but it's the volatility that this situation in the Black Sea with the grain corridor. I actually posted this on Twitter the other day, and I said the grain corridor headlines, those are the new trade deal headlines. Remember, Matt, when we would wake up, we never knew what headline we would have regarding the trade deal with China, right? And nobody knew how to trade, what to trade. You'd be asleep at 3 a.m. Somebody tweets something, and I'm like, oh my gosh, right? China's not going to buy enough commodities. Oh, they're back on. They're going to buy a lot. And so it got a little crazy. And I think we have a little bit of a version of that right now with the grain corridor situation.
Mm-hmm. Well, it's, that period of time was where I first kind of got exposed to the agricultural side at all. I don't know if you follow my friend Mark Rossano on Twitter at MarkFNY, but we were working on a project at that point in time that was looking at, because China had all these problems that cropped up, right? We've talked before about it's those shocks that cause the short-term shortages.
That's right.
And what that does to logistics and being able to get stock to market, those external events that come in and really mess things up that cause kind of inherent food price inflation that we've seen here over the past few years. But at that point in time, China had about African swine flu, so their protein was just absolutely wiped out. So then they imported as many pigs as they could from the U.S., and then that wasn't enough, so they imported as much chicken as they could.
That's right.
And then the next thing like right before, I think it was around this time 3 years ago, they struck a deal to get a bunch of soybeans over there. So they're just moving down the protein supply chain, right? So that brings up sort of two questions. Like, I guess first off is, what do we think about China this time around? The situation is very, very different, and obviously their consumption patterns can be one of these shocks that really sort of drives market. And then secondly to that, like, I know we have enough, but two-part question: how tight really are supply demand over the next year or so? And then with regard to the broader cycle, it's been my thesis that because we're on the energy side, we don't have the capability now to get enough hydrocarbons to where they need to go in the market. So we're suspecting that even when we cycle down, we're probably going to cycle down to higher lows. So I guess that's a three-part question. China outlook, how tight are supply and demand, and can China mess that up? And then thirdly, do we see a higher trough for this part of the cycle?
So excellent questions. And I'm going to start, from the last question and last comment that you made. I think it fits very, very well regarding higher lows. I think even when you cycle down, and you're referring to, call it crude oil, right? Are we going to see crude oil at $20, $30 in the near future? Probably not, right? And so again, I have this saying to our clients. I always say, hey, something could be possible, but not probable, right? And that's okay. Is it possible that you can see $20 crude oil? Anything is possible. Is it probable? It's not, right? And so same thing with agriculture, the agricultural space. Are we going to see $8 soybeans, $3 corn, 45-cent cotton in the next year? Don't think so. But do I believe that we could cycle down? And it kind of goes into the second question here. How tight is supply and demand? Not very tight. Worldwide, it's not very tight. Again, you have regional dislocations, right? Where basis is sky high in one place, where buyers are having to pay up in another place. that absolutely is existing right now because we are in a year that we had a shock. Like you said, when there is a shock, you have a readjustment period. And so I actually will compare the agricultural space, what I personally believe is happening and about to happen, very similar to what's happening in the retail space here in the United States, for instance. It's no secret to anyone right now that going into the holiday season here in the United States, retailers are flush with inventory, and they're not going to know what to do with it because we have an economy that is clearly on the way down, right? It's slowing down very, very fast. The Fed, I believe, is making a major mistake raising rates as fast as they are right now. I actually think the focus should get away from inflation. Inflation is, I think, simmering down a little bit, still high, but I think the focus is on the economy, needs to be in the economy. And so what happened was when we had all the supply issues, retailers said, listen, give me anything I can get my hands on because I'm not being able to get it when I need it. And the demand was high, right, Matt? I mean, like last year, 2021, everybody was buying stuff and retailers couldn't get it in time. Nobody from the car market, to trying to buy appliances to whatever. And that has totally cooled off at this point. And now we're going into a glut period where retailers just have all this inventory and the demand's no longer there, not to the level that they expected it to be, right? So what happened was the supply situation got solved sooner than what they thought. And it got solved before, the demand could come back or really it got solved in a way that let's just say demand didn't stay around for as long as it took to solve the supply. You can look at it both ways. But the grain markets, in my opinion, are in a very similar situation. We had a shock. The world market has had to readjust. But unless we haven't talked about weather yet, unless you have any major weather threats that cuts production severely, say right now, we're in the Southern Hemisphere production cycle. And so unless we have any major issues in South America, for instance, in the production cycle coming up, what's going to happen is that demand is no longer there at the pace that it had been. But because of high prices, it's that old saying, the best cure for high prices is higher prices. And the best cure for low prices is even lower prices. So we come from a time when prices got so high, the producer responded and said, hey, we'll plant more area. We'll put this out there. They got the fertilizer they needed to make that happen, even though at much higher prices, because they still had healthy margins, right, due to high commodity prices. And so now we're going into a time in 2023 where we could see the opposite shock. Oh my gosh, now, just like retailers have all this inventory, man, we got all this grain, all these oil seeds, what are we going to do with it? And again, higher lows. I'm not saying we're going to go to $8 soybeans, et cetera, or, like you say, like maybe the bottom in crude oil is not 40 or 30. It might be 60, 65, 70. I don't know, right? But I absolutely agree with you with the higher lows analogy or analysis. And lastly, to your first question regarding China, I spoke a little bit about demand just now. It's no secret to anyone what's happening in China regarding, the zero COVID policies, and their economy right now it's got some serious issues that they have to work through. However, when we talk about China, we also have to understand that none of us know reality. None of us really knows what's happening in China. We can have assumptions, we can have deductions, we say, okay, I think this is happening. I can assume that these things are happening, that demand is going to be lower because of the zero COVID policy, and economically they slowed down quite a bit. So yeah, demand is going to be slower. It's going to be slower. But the question comes, I have no idea when they might decide to say, boom, maybe soybeans get to a level where China says, you know what, at this level of price, we're going to come in and buy a lot more than we have been buying in this last 6 to 12 months. And so we can have assumptions of what those levels are for corn, for soybeans, for et cetera, for crude oil, for whatever it might be. but not a certainty of it. So what we do know about China, in the short term, we don't expect any major demand rebound coming out of there. But second half of 2023 could be a different story.
Right. And I'm not particularly optimistic about China either. I usually, for steel forecasting, I've always set my watch by the credit impulse. And the credit impulse this time around is comparatively weak to previous cycles. And in addition to that, we have steel inventories in China at these all-time highs. So, if we're not optimistic that they're going to, loosen up the bank lending, and we're not optimistic that downstream demand for, steel products for construction basically is going to be robust. That's bad for the industrial sector. But, what we were talking about last time was it's not necessarily bad for food. I mean, everybody still sort of has to eat. So that, I think sometimes like folks in my area will conflate, the elasticity of industrial demands with elasticity of crude oil demand or food demand, which frankly they don't fluctuate too much, even when we have like really high prices and demand destruction. Demand just kind of, hangs out in this, in a pretty predictable range because, well, we all need to eat, and we all need to get to work and all those sorts of things. So it's just, in my mind, it's always been a little bit different case, I guess, the best way to put it.
Yeah, for sure. And to your point, real quick on demand, yes, we can all assume China needs to eat. They're going to continue buying these agricultural commodities. The question that is on everyone's minds right now is when is going to be, or is there going to be the next impulse higher that, for instance, happened in, between 2005 and 2010, when, China was, buying 10, 15 million metric tons of soybeans more than the previous year after year after. So that was a shock. That was a demand shock. So I guess the question is, when is the next demand shock? Not supply shock. The supply shock can happen for geopolitical reasons. It can happen for weather reasons, in the agricultural space. But it's when is the next demand shock? And I think we both can agree that when you look at China's economy and where they're headed, credit impulse and all of these things that we understand, look, things don't look good, right? And things don't really look good for the world economy.
Right.
So in the short term, I personally don't see a demand shock, but it doesn't mean that it won't happen in the, a year, 1 to 3 years from now. So we always have to be prepared for that demand shock when and if it does come.
Yeah, well, we talked last time a little bit about, China's demographics don't necessarily support a demand shock this time around, right?
That's correct.
Because that's almost a generational dynamic. And I'm not familiar with India's, but I would figure that, we'd be more likely to see something like that come from, a country like India or, perhaps one of the other emerging markets that, Indonesia or I don't know. I think if we're going to see something like that, we're going to see it from somewhere else. India's.
I agree with you. And India gets brought up a lot, obviously, because of the sheer size of their population. And my view on that is, I don't believe India's demand is ever going to come close, or the demand impulse or the demand shock. I'll tell you what, I don't see us having a demand shock in the agricultural space coming from India. Demand shock, meaning, yes, they're still going to buy a lot of food. They have a lot of people to feed. But a demand shock to like very similar to what happened to China in the early 2000s. I personally don't see coming from India, and you said it very well. Could it be other countries in Southeast Asia? Could it be other? It can. We always have to be prepared for that and plan for that, because we advise mostly farmers, right? So the seller side. Now, we also advise some multinational companies on the buying side. And we have to be aware of both shocks. Right? What's a demand shock that can impact one side? What's a supply shock that can impact the other side? And I think anytime in any commodity, Matt, that we get too confident in one view for too long, that's when it gets dangerous, right? When you get into perma bear territory or perma bull territory, I think and you're not flexible enough to adjust your views to what's in front of you. I think that's when people get in trouble.
Well, that's also when it shows up on the cover of Barron's, and
that's exactly right.
and the trend is done there.
That's exactly it's like right. That marks the top. That's like right there, dude. It's that's it. We've seen the inverse Kramer ETF and all of that, but we got to see the Barron's Economist cover ETF, right? Boy, I'll tell you what, I saw a chart one of these days. I think it had Barron's covers on it or Economist. I couldn't remember. It's uncanny. I mean, it's crazy.
Well, it's so John and I work a lot with marketers from time to time, and the thing about marketing is that what you're trying to monetize is attention, and people pay attention to what's moving, right? And if you don't talk about food prices when they're normal, you talk about food prices when they're at extremes, right?
That's right.
You talk about energy prices when they're at extremes. Otherwise, it's not news. So it makes sense that you have to remind yourself that their business model is to sell advertisements. And
that's right.
If your audience is limited, well, you're not going to be able to sell as many ads. So their job is to get as many eyeballs as possible on their product at once. And you do that by being, urgent or unique. There are 4 U's of copywriting, which if John were here, he could prattle through. I can't do that, but unique stories, the urgency, very ultra specific. Commodities are up 377% this year is more sort of eye catching than 5% or something. So anyway, bottom line is when it shows up in media, that's usually a good sign that we're at or near some sort of inflection point. We're going to see, a speculative rush in either from retail or from generalists, and it's good to be at least have, if not one foot out the door, at least sort of starting to think about where we are in the cycle, because the next headline is like, spoilage rips through Brazilian corn supply.
That's it.
Prices, and
that's it. You're right, and you do go from one extreme to the other, and that's a great point too. Matt, to understand what's the motivation. Now, what motivation does the media have? And like you said, the business model these days, especially with so much information floating out there, it used to be right. Everybody was used to having a Wall Street Journal subscription or Bloomberg or whatever, this and that, the other. Now, so many of us, population-wise, want something for free, and so the media conglomerates are having to go through this transition. Many of them is like, okay, I'm going to put information out there, but I need clicks to pay for the ads, right? To attract advertising dollars, and that necessity for more eyeballs, like you said, causes extremes. Like you said, that the extreme copywriting that takes place, and we just need to understand that's their motivation, that's their business model, that's what they're going to do, but it doesn't mean that's exactly what's happening when it comes out. To your point, it's an inflection point when it comes out. Maybe it's almost done. It's almost being solved by the time it comes out, right? So it's something you got to pay attention to.
Right. It doesn't mean that they're fraudulent or incompetent.
No.
It's literally their business model. Like,
that's right.
Hey, look at this thing that's gone to the moon. Let's talk about that for 3 days, and then it crashes.
That's right.
There's nothing wrong with that. But as analysts, as investors, like we have to sort of be nimble about that, and we have to understand and feel when markets get to near-term tops to be able to hedge that risk.
Yeah, they get too euphoric or too pessimistic on something, right? And you said it perfectly. It is our job to understand that and help our clients understand that. It's like, hey, listen, just because the cover of this magazine or that magazine or this headline is saying this or that, they're not wrong, but how much of this that they're reporting right now has already taken place? Right?
Exactly.
And what point of this story are we? Is this something that we need to worry about for the next 6, 12 months? Or is it something, hey, maybe within the next month it gets solved, right? And like you said, it's our job to get to our clients and explain that to them, and not focus on conspiracy theories as to why. No, they're trying to sell. They're trying to attract ad dollars. It is what it is, right?
Yeah. Just it's fine. Let them do their thing. We do ours. With that said, I guess let's think. Yeah, it's fine, right? Let them do their thing, and we do ours. So with that said, let's think a little bit longer than the next 6 to 9 months or whatever. We're not getting a shock from China like we saw 2005 to 2010, right? We're probably not going to see that kind of a shock from India. But is there anything that you see of interest in this next part of the cycle, going out, say, 5 years? Once we get past this hurdle of logistics, do we move back into something that's I don't want to say normal, but maybe like seasonally predictable? And then I guess sort of the knock-on question to that is, how do we play it?
Absolutely. Some very interesting things to look at. And yeah, despite the fact that, demographically and what we just talked about, we don't see necessarily the next demand shock coming from China or this and that, at least for the time being, right? Maybe not India even, et cetera. That being said, one thing that I'm really watching for the next few years, specifically here in the United States as it pertains to soybeans, is the crush industry here in the US and the use of biodiesel, right? Because at least under this administration, we've had a strong push towards biofuels. And we have right now a lot of investment happening in that space. So quite a few plants, soybean crushing plants, coming online in the next 1 to 3 years, which should absolutely, in my opinion, hopefully bump up domestic soybean usage in the United States. Hopefully bump up 200 to 300 million bushels of use in the next 2 to 3 years. The reason that's important is, at least in my view, is because I believe that soybean exports will fall by a very similar amount, if not even more than that. And so there are those out there that believe there will be a demand shock coming from this new biofuel usage, right? Biodiesel production, soybean crush, soybean oil, etc. There are some folks out there that believe that soybean demand for exports will remain relatively steady or go a little bit higher in the next few years, and domestic usage will go higher simultaneously. I don't see that happening. And that, to me, increases the importance of that the biofuel usage, soybean usage for crush. Because if we don't get that, then the soybean industry in the United States is in really big trouble. We're going to have very, very high stocks here in the United States. We're going to go from 200 million bushels in stocks to close to 1 billion bushels, 2, 3, 4 years from now, if we're not careful. Something very similar happened during the trade war, right? So my view on that is, yes, I believe that soybean usage for biofuel is going to increase considerably in the next few years. But where I differ from most other analysts in this subject is that they are not taking into account, in my opinion, or a lot of the players are not taking into account the sheer reduction in exports that we're going to see in the United States. And the reason for that, Matt, we talked about it, right? Without a demand shock coming from overseas, coming from a China or an India, et cetera. Again, demand shock. Yes, China is still going to keep buying soybeans at 95, 100 million metric tons of it per year, et cetera. But the shock of them increasing their imports 10, 15, 20 million metric tons a year, I don't see it happening. Demographically speaking, even you just talked about it, you don't see it happening either. And so you need demand from other sources because you don't have enough demand coming from China alone to buy up to all the supply that we have Brazil and the United States producing at the same time. And we talked a little bit ago about the fact that Brazil has a price advantage for exports. And so as long as Brazil is producing at the clip that it is producing without any major weather shocks, Brazil is going to keep increasing exports, which is going to decrease US exports because we don't have enough demand for both countries at the level of production that they currently have. So you do need that demand coming in from the domestic space here in the US. So that's definitely something to keep an eye on. Now, say I'm wrong in that assumption, and say US exports stay relatively supported here and maybe go a little bit higher in the next few years, opposite of what I believe happens, aside from years of supply shock due to weather in Brazil. But if I'm wrong and US exports stay strong and the US biodiesel industry, the usage of soybean, soybean crush goes up 200, 300, 400 million bushels for biofuel usage, then at that point, we're going to have another supply shock, right? And then at that point, we're going to see much higher soybean prices. But right now, I don't see that happening simultaneously.
Gotcha. And the follow-up question there, like, if the cycle plays out as you expect, like what's, from an investing standpoint, what do you think the best way is to play it? Or do you just have to take a seasonal approach?
I absolutely will take a seasonal approach. I think, commodities, as we know very well, Matt, they move in cycles, and it's for us to have a permanent view right now with everything that's going on geopolitically around the world. It's very difficult, right? So for the last couple of years, agriculture machinery, for instance, right? You're looking at the John Deeres of the world and some of these other companies. They've done extremely well. Some of the publicly traded trading companies around the world have done extremely well. Their margins have skyrocketed, especially after some very tough years around the trade war years, right? And so that's the reason I say, right? We think about it. In the last 5 years, we've been through two completely different cycles where, if you were investing in a John Deere, for instance, in 2018, well, you lost money for couple of years, 2016, 17, lost a decent amount of money until the second half of 2020. And then the 2-year period between the second half of 2020 to now has been outstanding, right? And so two very different cycles in a 5-year span. And so it becomes very difficult to foresee a trend, a clear trend. Now, yes, this whole biofuel story is something we need to keep an eye on. But then politically, what's going to happen in the 2024 elections? We just had midterms. What is going to happen? Then I sort of go right back at you. Are we going to have a Democratic government in power in 2024, or are we going back to the Republican side? And if so, you have major repercussions for the biofuel, biodiesel story. So it's very difficult to give you a clear, straight answer here. Oh, hey, for the next 5 years, you should be long this or that stock, because the cycles could be quite different. I'm not going to say year to year, but within the next 2 to 3 years, we've got a lot of things coming in the pipeline that we need to pay attention to that will impact those cycles.
Right. And we've talked before. I think it's incumbent upon analysts to, not just to share information like we're sharing, but also I went to London Metals Exchange Week, about a week and a half ago. And the one thing that I saw there was that the future for pretty much everything is very muddy, right? It's not really clear. All we can do is take these government policies sort of at their face value and say, well, if this is going to be the case, then it requires this much cobalt and manganese and whatever. And what we're discovering is that, well, we don't have enough stuff here in the near term to basically accelerate that transition going forward. And so as a result, I think we just have to be increasingly Bayesian in our approach to everything. When we get new information that is, that is contrary to what our prior view was, we have to be able to change pretty frequently.
Yes.
And we have to communicate that uncertainty to clients. We have to communicate it in the form of, price forecast. Like my price forecast now for coal has a plus or minus margin of error of $100 on either side. And that's, when you get out 4 quarters, there's a lot that could happen.
There is.
Could we get a resolution to Russia and Ukraine in the next 12 months? Yeah, we could. We could absolutely. Do I know that that's going to happen? I don't. No. There are folks who are, much better at kind of geopolitical prognostication and stuff, but my track record is unblemished by success, and I'm going to just continue to rely on others who are smarter than me on that. And if I need to update my view, if something, when the facts change, I change my mind. And
we got to be flexible, Matt. We have to be flexible, and it's to your point on Russia, Ukraine. I am of the view that aside from a awful situation of a third world war, where everything changes, a lot of the worst has been already priced in.
Yep.
Right? The market has already adjusted to reduced flows, whether it's on the energy space and whether it's on the agricultural space, out of that region of the world. Reduced, right? Space, reduced flows. I'm not saying lack of flows. And so I believed a lot of it. Like the world has adjusted to this new reality. What happens, to your point, if all of a sudden there is a resolution and there is no third world war, we hope, things change real quickly, because things can get, wait a second, the world has adjusted to the reality of reduced flows. Now we're going to have increased flows. Oh my goodness, right? So now we go through a down cycle. Now, again, maybe a higher lows kind of down cycle, very likely, right? But we got to adjust our views. We got to just, I love what you just said, and I agree. I'm of the same view that if you get married to a view in these markets, especially the world that we live in today, you're going to get slaughtered, and in the process, you're not going to, you're going to hurt your clients. And our job is to not be afraid to say, listen, I don't know the answer to that, and I want to look into it, and I might come back to you with a wide range of possibilities, but that's my best effort at this point. And I want something more specific than that. If you do, understand that I'll be guessing at that point, right? And it's
right.
Analysis gets thrown out the door, right?
Yeah, exactly. Like on the mining side, it's like we know what mines exist, we know what their capacities are, we know what projects are coming on, what those capacities are going to be, who's depleting reserves. These are known things. Right. What we don't know is what's the weather going to be like. Is there going to be unrest in Chile that affects copper demand? Are the railroads going to run in the U.S.? Are we going to have a labor strike, in Q4? I don't know. Like right. all those things exist. Like we have to write about them and call them risks to the forecast or whatever. But really, the forecasting isn't it's a process. It's not a prescription for the future. 100%. And I think folks are doing a better job of communicating that. I'd like to do a little bit better job of communicating that to politicians. But that's probably that's beyond the scope of this discussion. And
wishful thinking for now, right? Wishful thinking. Yeah, but it never hurts. Never hurts to dream, Matt. Never hurts.
I know, but man. I just want to say, like, before we hit pause here, thanks so much for coming on and talking to me. I have such a great time talking about these subjects with you, because it seems like we kind of approach markets in a similar way. Plus, the West Virginia thing doesn't.
That's that's absolutely right. That's absolutely right. It's been a pleasure, man. Been a pleasure getting to know you better. And these conversations, again, it's not a matter of, Pedro knows it all, or Matt knows it all, or these guys don't know anything. No, it's maybe somewhere in the middle, right? It's definitely right. Not to know it all or know nothing. But
we got to figure it all out together.
We do, and we got to explore the subjects together. And maybe I said something that you're like, you know what, Pedro, I don't see eye to eye with you on that one. Let's talk about it, right? And so I think anytime you find situations like this, professionals such as yourself, myself, that can have these conversations without having the need to be proven right, and you're open to discussions, right? And you're open to new scenarios. I think the growth happens, right? Professional growth happens to your clients, to my clients, to everyone else involved. So it's been a pleasure. Anytime, you can count on me anytime that you want to talk about agricultural markets, basketball, West Virginia, whatever it is that you want to talk about, man. I'd love to hang out with you guys again. And thanks for having me on.
Oh, no problem. Yeah, college basketball season's coming up, so I'll take you up on that. Before we go, tell people how to get in touch with you, how email, Twitter, all that stuff. Just give us your bylines. We'll try to put links in the comments, and we'll go from there.
Yeah, I'll keep it simple. Just at PhD, my initials, Chicago, at PhD Chicago. Find me on Twitter. I'm working on here soon, potentially starting a newsletter talking about some of these macro geared towards the agricultural space. And so, if you want to know a little more about my work, reach out to me on Twitter, send me a DM, follow me, send me a DM, and sort of like you and I met. I think that's the easiest way to get in touch here. So at PhD Chicago.
That's great. Yeah, Twitter has been by far just a joy over the last year. I can't believe I'm saying those words are coming out of my mouth even. But I probably met more good friends on Twitter over the past year than I made over the past 10, and they're all smart. They're all fantastic analysts. They're all really engaged, and it's just been a joy. So
likewise, it's I think we old heads like us, we have to learn how to use this these social media platforms. And I actually found out of all of them, Twitter to be the most useful one. And again, this is not a pitch for Twitter, none of that. I'm actually anti-social media for the most part, right? But like once you start diving in, and like you just said, you start finding folks, that from all sorts of like different origins and cultures, and that look at things in a different way. And yeah, it's been absolutely tremendous. Again, we just have to know how to use it. And once you learn the ropes of Twitter, there's a lot of interesting, not only subjects, right, and material there, but just a lot of great, interesting folks that it's been a pleasure to get to know as well, just like yourself. So awesome stuff.
Thanks, buddy. Thanks, buddy. Well, hey, thanks again for being here. Once again, folks, you can find him at PhD Chicago on Twitter. That was Pedro Dejneka. And me, you can find me at MF Warder on Twitter. I'm Matt Warder, founder and CEO of Seawolf Research. Yeah, I guess with that, Pedro, thanks again for being with us. And we'll throw it back to you, John. Thanks a lot.
Thanks for that conversation, guys. That's a lot more enlightening than I think anything else that I've seen on this particular subject. So I really appreciate it. For all of you guys listening and watching this, subscribe. We're going to bring more high-level analysis of different commodities markets to you here in this series, From the Earth to the Moon. The idea is just to dig in and bring the best-in-class minds in each of the different commodity sectors into conversation to keep you updated on what's actually happening, so that you can see what's actually going on the ground versus what's talked about in the media that may be disconnected from the actual macroeconomic analysis of what's happening. So make sure you subscribe. Thanks. Take care.